Welcome to Furniture Industry News. Today is Monday, August 26, 2024. In today's landscape, mobile phones have become essential tools for shopping and researching products, notably within the furniture industry. According to a recent Bizrate Insights survey, an overwhelming 70% of consumers spend up to 5 hours each week using their smartphones to research or purchase products. Even more staggering is that 30% of respondents spend 6 hours or more weekly on these tasks. This trend is most prominent among those aged 30 to 39, with over half making more than half their purchases through mobile devices. The convenience and time-saving aspects of mobile shopping are key factors driving this trend. The survey revealed that 67% of participants made purchases directly from their phones, while 66% used them for product research and 61% to compare prices. Consumers also use mobile devices to enhance their in-store shopping experiences, such as placing orders online for in-store pickup or checking product availability before visiting a store. Older shoppers are also contributing significantly to this trend, especially when using their phones to check store hours and locations. Usage among those aged 40 to 64, and even those 65 and older, surpasses the average. This indicates that mobile shopping is breaking age barriers and becoming universally accepted. As we move forward, it's clear that mobile commerce will continue to grow, offering both challenges and opportunities for retailers in the furniture industry. For many, incorporating seamless mobile experiences into their sales strategies will be crucial for staying competitive. The domestic bedding industry has seen significant growth, largely influenced by a series of anti-dumping petitions aimed at curbing mattress imports from various countries. More than a year ago, the third such petition was filed, targeting mattresses from 12 countries including Mexico, Italy, and the Philippines. Since then, mattress imports from these locations have dropped dramatically, leading to a boost in domestic production. Several international mattress manufacturers have shifted operations to the United States in response to these petitions. Companies like Delandis, Sleep, Kuka Sleep, and Magnaflex have opened or expanded facilities within the country, aiming to capture market share previously held by imports. For instance, Kuka Sleep moved its production from Mexico to Dallas and opened a 504,000 square foot factory to handle increased demand from U.S. customers. The International Trade Commission's findings supported the claims of domestic manufacturers, assigning final anti-dumping rates to the targeted countries. This action was driven by a consortium of U.S. companies and labor unions, including Brooklyn Bedding, Serta Simmons Bedding, and the United Steelworkers Union. The consensus among these stakeholders is that these petitions help level the playing field, making it more difficult for foreign producers to sell products at unfairly low prices in the U.S. market. However, despite the decrease in imports, sluggish mattress sales overall present a complex picture. Executives from major companies like Tempur Sealy and Leggett and Platt note ongoing challenges, including high inventory levels and low demand, which they attribute to broader economic factors like high interest rates and a stagnant housing market. Looking forward, industry leaders remain cautiously optimistic. Companies such as Ashley Furniture are making substantial investments in expanding their domestic manufacturing capabilities. Projects include new factories and upgrades to existing facilities, signaling long-term confidence in a market recovery. Though the first half of the year has been tough, many executives expect that late 2024 or early 2025 could mark the beginning of a turnaround for the bedding industry. As we move into the final quarter of the year, all eyes in the furniture industry are on Labor Day sales, traditionally a crucial period for boosting revenues. Industry professionals are optimistic that this year's Labor Day could mark the beginning of a much-needed turnaround. Despite sluggish store traffic throughout the year, holiday sales events have shown resilience. This is particularly important as Labor Day serves as a barometer for the industry's performance in the fourth quarter. Recent reports suggest that while regular shopping periods have been slow, holiday events have kept the momentum going. There are early indicators pointing towards better conditions ahead. The latest jobs report, while not overtly positive, may prompt the Federal Reserve to lower interest rates. A decrease in interest rates could positively impact home sales and household formations, both key drivers for furniture purchases. Moreover, data from the travel industry indicates a softening in leisure travel bookings. This shift suggests that discretionary spending might be reallocated back to home furnishings. The number of Americans planning multiple trips has decreased, meaning more disposable income could be channeled towards enhancing their living spaces. Additionally, price sensitivity remains a significant factor. Many consumers are trading down to lower price points, requiring manufacturers and retailers to offer substantial value at reduced costs. This dynamic has pressured margins, but also opened avenues for growth in lower and mid-market segments. Labor Day weekend sales will provide critical insights into the industry's trajectory. Retailers, manufacturers, and industry analysts alike will be scrutinizing the results closely. A strong Labor Day performance could validate forecasts for a late 2024 or early 2025 recovery, while a lackluster showing might necessitate revisiting those projections. This Labor Day is more than just a sales event. It's potentially the first step in revitalizing an industry eager for positive change. The preference for American-made furniture among consumers has grown significantly in recent years, and retailers are taking notice. This trend isn't just about supporting local businesses. It's also heavily rooted in several practical advantages that American-made products offer. During the supply chain issues of 2021 and 2022, domestically produced furniture showed itself to be more reliable in terms of availability. Retailers like Hoot Judkins in California saw a marked increase in the percentage of their dollar volume from American-made goods, rising from 67% in 2021 to 74% in 2022. It's clear that the appeal goes beyond just patriotic sentiment. Customers are also recognizing the quality and longevity of these products. Retail giants like Gallery Furniture in Houston have capitalized on this trend by integrating it into their brand identity. They emphasize the sustainability and durability of American-made products, contrasting them with often less substantial imported furniture. Jim McIngvale, the store's owner, notes that explaining the long-term benefits of these pieces, like their use of solid wood and the reduction in environmental impact, can sway even the price-conscious shopper. Even in regions like St. Louis, where Muller Furniture has emphasized their broad selection of domestic products, the message has resonated well. With targeted marketing campaigns focusing on the narrative that buying American-made furniture supports local jobs and industries, retailers have successfully managed to attract a loyal customer base. Moreover, the conversation often goes beyond price. While initially, some customers might balk at the higher costs associated with American furniture, they are usually convinced by the quality and the story behind each piece. Retailers like City Furniture have made it a point to showcase their in-house American-made upholstery collection prominently, ensuring that sales teams are well-versed in its benefits. As import prices continue to rise due to higher shipping costs and other factors, the price gap between domestic and imported goods has narrowed. This shift means consumers are getting better value for their money with American-made products, which are now more competitively priced without sacrificing quality. Retailers are also leveraging trends such as sustainability and local craftsmanship in their marketing strategies. By doing so, they are not only catering to consumer preferences, but are also building a strong, value-driven narrative that appeals to a wide audience. Overall, the growing demand for American-made furniture is a trend that is likely to continue, and smart retailers are aligning their strategies accordingly, making it a central theme of their sales approach. Coast to Coast Accents, a well-known furniture importer, is officially in receivership after defaulting on a credit agreement with its bank lender. This decision came following a request by Fifth Third Bank to the U.S. District Court for Western Tennessee earlier this month. The bank argued that Coast to Coast and its owner, Andy Stein, were unable to manage their business effectively due to a severe cash shortage and lack of access to additional debt or equity financing. The court agreed on August 23rd, allowing a receiver to take control of Coast to Coast's operations. This move implies that the company had numerous financial defaults, including missing due dates, failing to provide financial statements, and missing property tax and interest payments. As of early August, Coast to Coast had nearly $894,092 due on a real estate loan and an additional $2.66 million on a revolving loan. Coast to Coast Accents has been supplying furniture for accent, casual dining, and occasional categories, with operations including a 300,000 square foot distribution facility in Memphis and showrooms in High Point and Las Vegas. The company's mission has been to deliver quality home furniture at great value. However, recent developments indicate significant operational and financial strain, leading to this critical juncture. Given these challenges, the receiver will be tasked with managing protecting, preserving, and possibly liquidating the company's assets for the benefit of Fifth Third Bank. This situation marks a significant shift for coast-to-coast Accents, casting uncertainty over its future in the furniture market. IKEA is making waves in the secondhand furniture market with its innovative buyback and resell program. At a North Carolina IKEA store, loyalty manager Jeff McGowan gave an overview of this new initiative, which allocates a dedicated floor space to pre-owned IKEA items. These items range from furniture to housewares, offering significant savings to customers. This is part of a broader trend towards bargain shopping and sustainability. IKEA is taking things a step further by launching IKEA Pre-Owned, an online peer-to-peer marketplace. This platform allows consumers to buy and sell used IKEA furniture directly to one another, much like how platforms like eBay, Craigslist, and Facebook Marketplace operate. The initial rollout will happen in test markets like Madrid, Spain, and Oslo, Norway, with plans for a global expansion in the future. The demand for secondhand IKEA products has been on the rise. The buyback and resell service alone saw a jump from 105,000 users in fiscal year 2022 to 211,600 users in fiscal year 2023. In this new marketplace, sellers list their IKEA items and set their prices, while buyers collect the items directly from the sellers, who can even receive payment in the form of an IKEA voucher with a 15% bonus. Jesper Brodin, CEO of Inca, the main operator of IKEA stores, expressed excitement about this venture. He mentioned that this has been a long-term goal and that IKEA is now ready to take on more advanced digital initiatives. This strategic move by IKEA aligns with its broader objectives of supporting sustainability and offering low-price solutions. As the demand for secondhand items continues to grow, IKEA's new platform is set to make a significant impact in the furniture retail landscape. So for those looking to furnish their homes on a budget while also being mindful of the environment, IKEA Pre-Owned is definitely worth keeping an eye on. That's all for today's episode of Furniture Industry News. Don't forget to subscribe to our podcast for the latest updates and insights into the furniture industry. Thanks for tuning in, and we hope to have you with us again next time.